Good day, everyone, and welcome to today's FXDD webinar. We have Andrews Pitchfork and Chuvashov's fork explained. It's June 13. My name is Nenad. And before we start, have in mind that Forex trading carries a high level of risk that is not suitable for all investors. Everything you see and hear from me is my personal opinion only. Please educate yourselves on the risks associated with Forex market before you start trading live. On these web addresses, you can sign up for more live educational and live trading videos. So today's agenda, mind patterns, Andrews Pitchfork, and Chuvashov's fork. We will start with mind patterns first. Before we delve into Andrews Pitchfork and Chuvashov fork, let me tell you that all of these patterns are subjective, very subjective. So I can draw one pattern, you can draw another pattern. Andrews Pitchfork and Chuvashov's fork have very specific rules, but because they depend on picking up tops and bottoms, it can be subjective. But it is those mind patterns that we subconsciously memorize usually during the actions that we repeat each day. So when they're subconsciously recorded, they actually are exhibited consciously. So that is why I might see one pattern, you might see another pattern, because especially if you have experience in Forex trading, charting those patterns can be totally different. I might see one, you might see another one. Mind patterns are always happen in subconscious mind. I already showed you on one of my previous webinars these mind patterns. And it's important to know that this is very true, especially that conscious mind we only use conscious mind 10% of the time, while subconscious mind is used 90% of the time. Conscious mind do the analysis, it thinks and plans, and it's reserved for short-term memory. That is why charting for new traders can be very hard. Until all of these patterns, not just mind patterns, all the patterns that you see throughout your trading day, trading month, or trading year will be subconsciously memorized and you won't be aware of it. Why? Because subconscious mind uses 90% of long-term memory, its emotions and feelings, habit patterns, relationship patterns, addictions, involuntary bodily functions, creativity, developmental stages, spiritual connection, and intuition. So everything, guys, here that is important to trading is in your subconscious mind. So that is why you need to focus on memorizing this and practice. The best thing that you can do, especially if you are a novice trader, is to keep practicing. If you do it, you will develop good habits. You need to actually stay away from bad habits, because a bad habit is still a habit. Good habit is something that you should do. So try to memorize everything that you do on a positive scale. Memorize mind patterns, memorize all of the chart patterns, and do something for yourself. That is important. In Forex trading, if you don't know what you're doing and you're doing from conscious mind, not from subconscious mind, it will lead to losses. Many times before, I've been in a situation where I can recognize when I make a mistake. But each problem has a solution. But until the solution comes from your subconsciousness, it will be very hard to actually solve. You need to know that everything that you do each day is going into your subconscious mind. So sometimes you might say, okay, I see this pattern, I will now trade, but actually it happens completely the other way, especially when it comes to trading, when risk management is the holy grail. So you need to do it correctly by doing trading on a it doesn't matter if it's a proprietary system or it's something that you trade. You need to memorize it. You need to study. You need to be positive. And once you have developed good habits and positive, and it reflects as a positive on your account, positive score, then you might start trading also live. All these mind patterns are connected to stress cycles, because trading is stressful. It's not easy. Very often it happens that we might enter with bigger lots than we actually expected because we were sure that the trade will go our way. But if it doesn't go our way, that will reflect negatively on you. Attitudes, beliefs, assumptions, automatic thoughts, negative moods, negative psychological symptoms, everything is connected to stress. And if you're stressed because your mind actually does not function aligned with the market, then this negative stress cycle will just go into a sort of never-ending cycle, a pandemonium, and you will lose. No matter what you do, you will lose. That is why I always will tell you guys, what I'm telling you, that is how I do. I don't care. I might be wrong, and I'm perfectly fine with that. Maybe 1 month is good, next month is bad, but overall in 6 months you should be positive, right? So it's in trading. We are not doing short-term trading, and we don't have short-term memory. I don't care if I'm positive for 1 or 2 weeks or 1 month. I tend to be positive on a 6-month scale, and that is important. Longer term, mid-term is important in trading, and that is also how we memorize good things. If we repeat constantly 1, 2, 3, 4, 5, we will learn, right? 1, 2, 3, 4, 5, even during the sleep. And that is what I do also. I haven't changed Camarilla MACD the core of the system stayed the same for 8 years. There are some slight adaptations because of volatility, because of other things that happen in the market. So I memorized good thing, and I've been practicing and doing it also each day because I trade live. And these mind patterns are very powerful thing. So why I'm telling you this is why, because our education is something that you should memorize, not just these chart patterns that we talk and that we will talk about, but everything, guys, that you hear from me, from Chris, you should memorize it because it will help your trading decisions. So let's start with Andrews Pitchfork. This is how it's done. Again, this is very subjective, but you need to practice it. Andrews Pitchfork is a pattern that is subjective. It is a price action indicator. It uses equidistant lines on the chart. It simulates price behavior, but it's subjective price action channeling because we use 3-point line. Point 1 is low, point 2 is high, point 3 is low. And this is how it looks on the chart, okay? Point 1, point 2, point 3, if it's a downtrend. If it's an uptrend, point 1, point 2, point 3, I will show you that on real chart. Andrews Pitchfork uses MT4 and MT5 platforms the most. Okay, but it's different charting on MT4 and MT5. I will use MT4 because I'm trading on MT4. And still, MT4 is far the most popular platform for traders. The blue line is the straight line between the high and the low of points 2 and 3. After you plot them, you need to draw the median line of the trend. Draw arrayed trend lines from point 2 and 3, and trading the fork, guys, needs complementary indicators. I will show you how to draw it, but you need to know that it needs some complementary indicators because, as I say, it's very subjective. Okay, I will move the screen now, and we will use the example of, let's see, yeah, we can use this example here. Okay, here we are. So this is the GBP Australian dollar, for example, and we are using it for charting. So when the price is going in downtrend, you need to wait for a swing. So at this point, you don't do anything. As the price develops, okay, like here, then you start drawing patterns. In downtrend, okay, this is point 1, this is point 2, this is point 3. I will remove it, so I will chart it. You go to insert, okay, this is FXDD platform. Then you go to the indicators, okay. Okay, you go lower, guys. Oscillators, volumes, bill, yeah. So it's actually here, Andrews Pitchfork channels. See, channels, Andrews Pitchfork. It's a sort of equidistant channel. Yeah, I have also we have our own indicator. And if you trade with FXDD platform, you might be able to obtain it. Just send us an email. And if you have a live account and you trade with FXDD, we can give you the indicator that automatically charts these lines, but more on that later. So we will use this example, guys. Okay. So let's start the move. This is even better example than this one. This is point 1. Okay, then we have the point 2. Okay, and we have the point 3. And watch this. Watch how the price follows it. Of course, there are breakouts of the channel, but it follows it. Once the breakout happens, you might trade it. As long as the price is contained within the channel, you might actually trade channel tops and bottoms. Of course, when trend changes, okay, then you need also to change your charting. For example, this is a strong uptrend here, and we also need points 1 to 3. In this example, point 1 is the low, point 2 is the high, point 3 is a higher low. So insert Andrews Pitchfork, point 1, point 2, point 3. And you see the price went here, broke above the channel. So this is a trading breakout opportunity, retest, continuation. Then the price goes back inside the channel. It goes clearly inside. Then breakout, retest, continuation. Then another move. When another move happens, you just redraw it. Okay, so you place it again. Okay, so in this example, it's not very clear, but we need to use what we have, of course. Point 1, point 2. Sorry. Okay. I will delete it. So again, point 1, point 2, point 3. And you see, immediately there was a breakout. But you chart it again. Andrews Pitchfork. Again, point 1. Okay, in this example, when the price it makes a breakout, you need to wait for the breakout to retrace and you draw it again. Okay, so pick it. We can do it like this. Okay, but it's not good. You see why I'm saying it's subjective. You need to wait. You need to wait for the best highs and lows. That is why you can use fractals. Okay, point 1, point 2, point 3, and see what happens. Perfect. And then breakout. Okay, then move back, breakout, move back, retest, and breakout. Now the trend has changed here. So you need to redraw it. Okay, when trend changes, you need to redraw it. Again, these lines are good when price is contained, but some traders can also trade breakouts out of these channels. For confirmations, you can use MACD indicator, you can use other indicators, but it's a channel trading. I personally, we have our indicators, but I didn't use it in trading because I have my own method. But if you like to use it, guys, it's definitely one of the great indicators, and I will show you that. Okay, now before we go, it's called regression here. Regression, something similar, and now you will see the difference real time. But before we move on to that one, let me go to Chuvashov's fork. Okay, and then you will see the difference. We need to cover Chuvashov's fork. Okay, so Chuvashov fork, we use fractals in this. Fractals indicator is used to draw Chuvashov fork pattern. Fractals 1 and 2 are main trend. This is purely counter trend. And this is easily traded as a breakout counter trend. For me, Chuvashov's fork is better than Andrews Pitchfork. I don't know why there is a name Chuvashov's fork. I read it a long time ago on some MetaTrader forums, but obviously this is the name that applied to Chuvashov's to this fork, and it's pretty much very. It can be subjective, but when you have the indicator, it's very strict, it's very concise, and you don't have to guess points 1 and 2 because you trade with fractals. The main uptrend line is drawn based on lower fractals. The main downtrend line is drawn based on upper fractals. We wait until fractal 3 gets formed, following the main trend line breakout in the opposite direction. And the lateral line of the fork must be in the direction of the trend. Okay, this is how it looks, guys. Again, this is very, very clear. counter trend moves. You exploit breakouts as counter trend moves similar to wolf waves. But in this, you use fractals. Okay, so we have this fractal, we have another fractal. We have two fractals. When two fractals form, you draw a trend line. Okay, it's clearly here. The main downtrend line is drawn based on upper fractals. Here it is, 1, 2, and you have downtrend line here. Then we wait until fractal 3 gets formed following the main trend line breakout in the opposite direction. So this is it. This is point 1, okay, point 2, point 3. You connect these and you get a breakout point, okay, from this zone. Here, the similar thing, but in the opposite direction. Okay. The main downtrend line is based on upper fractals. When we have an opposite move, like it's shown here, we have actually uptrend line. So uptrend line is based on lower fractals, and the point 3 is the similar. So we have one fractal, we have another fractal, and we draw a trend line. Now we need to have also either 2 or 3 touches of the lateral line. Point 1, point 2. If this makes a point 3, you wait for the breakout in the opposite direction. Now, this might look confusing, but actually, if we take a look at this chart, you will see that it's not hard. So this is Chuvashov's fork, and this is our indicator that shows Andrews Pitchfork. I will remove it. So for this, you see, you have clear breakout here, and you have a possible breakout there. Let's use another example. Euro yen. We had a breakout here. The price actually went up and then broke out. Now, if the price breaks this trend line, it will be a buy trading opportunity. The Australian, New Zealand, this was the breakout, sell, and the price went down. Now the price formed based on fractals and trend lines, a possible counter trend move. Okay, this indicator draws automatically the lines. And you can see it here. If you don't know how to chart it, I will repeat again. When price is moving upward, you can draw it yourself. Just place fractals. You go to Insert Indicators, Bill Williams, and you go to fractals. Okay. Place it on your chart. You will see fractals. So you connect in, when price is going up, you connect 2 fractals that are below the price. So point 1, point 2, you connect it. Then there are lateral fractals. Point 1, point 2, you draw a trend line. The point 3 is the breakout point. So this is the breakout point. Similar here, where price is going down, just connect 2 fractals. Then wait for a lateral fractal to appear here. When price breaks this is point 3, and you trade the breakout. Okay. This can be confusing to you, but rest assured that it's not confusing, guys. You can do it yourself based on fractals. Here it is, 2. Okay, you have there 1.1, 0.2. Okay, then you have lateral fractals here. Okay, the price didn't break this. If it broke out to the upside, you will actually have had a trade. Okay, now for down move. Okay. Now, this is what I charted. For a down breakout, price needs to go up. Okay, price needs to go up. Like here, you see, this is point 1, this is point 2, and point 1 and point 2. So just draw lower fractals. Point 1, point 2, guys, draw these fractal lines. Okay, you connect it. Okay, and then for the lateral line, you wait for the breakout. I don't like to draw these lateral lines like this, because then it will be too steep. I always, guys, wait. Okay, I wait for when I was actually testing how to trade it. I waited for some deeper moves like this, point 1 and this point 2 here. See, and this was the breakout, retest, continuation here. That is why this indicator is useful, because the indicator will plot the lines automatically. But if you see that something is very, very, I can say, like this, steep, I wouldn't trade this. Although this was successful, but I wouldn't trade this. Okay, we can find a lot of examples here on the indicator. This breakout was successful. This breakout was also good. So you see, it's like you will always have the chance to trade these Chuvashov's fork, and much higher chance to win is to trade Chuvashov's than Andrews Pitchfork, in my experience. Of course, if you practice it, you might see it otherwise. Also, guys, if you trade with FXDD and you have a live account opened with our website, you can send us an email, and we will send you the indicator, of course, for free. Another thing is, so this is our indicator, Chuvashov's fork. But as I say, you don't need to. You can do it manually. This is based on Andrews Pitchfork, and it draws actually two pitchforks. And the basic premise is if the price goes up, you wait for a channel bounce, okay? And if the price makes another channel, then you close your trade and trade the other channel. You don't take breakouts with this, but instead, when price goes inside and closes inside, here, for example, you would make a buy trade. If price goes here, you close the trade. Then if it goes up and closes inside, you go with a sell. Similar here. Price gets below, closes inside, you go with a buy trade. Price breaks above, closes inside, you go with a sell trade. It's always best to follow the trend because the main trend is always stronger. So this was the main trend. Now the price started a downtrend move. And you can, of course, test everything. And the best is when there are two basically pitchforks and when they align, like here. Okay, point one, you close the trade, and then price goes, breaks above, break below, then closes inside, you actually go long. Down, you go long. So this is also based on Andrews Pitchfork. It's regression, but you can also use, as I say, some other indicators to confirm your trades. I personally like to see this, and I use patterns. So usually candlesticks could be enough, especially if you see that some candlestick pattern appear, like here. This was like almost engulfing pattern, okay, and it's clearly Marubozu that actually pushes the price to the upside. Here, obviously, a form of pin bar, shooting star, and the price rejected. I hope that this is clear. If you have any questions, feel free to ask me. If not, this webinar is being recorded. It will be uploaded to FXDD YouTube. So you are free, guys, to leave comments below the video. If anything is not clear, I will explain. Okay, so yeah, so this is a custom indicator, but you can, of course, use it yourself. Okay, you go to Andrews Pitchfork, and you can actually do it as I did, like this one. You see, based on Andrews Pitchfork, this is even better, because it gives you not, you see, this is breakout here, but it actually was starting from this spot. Much better than, for me, this is much better, our indicator, than native. But you can also exploit breakouts from Andrews Pitchfork if you are into channel trading, like here, like I showed you. For example, here also another example, Andrews Pitchfork, 0.1, 0.2, 0.3, you see? And the price broke and then continued. When this happens, guys, as I already told you, you make another pitchfork. Again, 0.1, 0.2, 0.3. And you see, every time the price breaks out, you can realign it. Very subjective. Because of that, I'm not using it. For me, the indicator that draws it automatically is much better. But Chuvashov's fork, if you are into this, Chuvashov's fork, again, is something that you should definitely pay attention to because this clearly gives you, based on fractals, clear buy ideas, sell ideas, and of course, you can trade it on each time frame. I hope that you enjoyed it. Feel free to ask questions below the video. Cheers, and as always, trade safe.